Hello guys, glad to have you on board again. Today I'm back from my vacation week, and by the way, thank you guys. You've been pretty gentle with me as I got fewer message than what I was actually expecting out of the classical burst of message I get when I go back home. So just 10 messages in here. I already answered some of them yesterday evening. But still, a lot less messages than I would have expected. So thank you for this. I should be able to handle this within the next 48 hours. So each and every one of you who sent me a message in here, Discord or TradingView or email should probably get an answer ASAP. Anyway, last week was obviously hell of a week. I don't know how and why, but still, that's pretty much how it is. Anytime I get to take some vacation is where the actual stock market makes its move. So it's pretty much shitty because instead of being able to reinforce my position on shorter time frame, I was occupied somewhere else and I wasn't able to deal with it. But still, I'm happy I had some bearish trades already. But obviously I missed some reinforcements that I would have liked to take. We're going to have to talk about multiple things today. The stock market, obviously, the forex market is a huge market mover recently. We're going to talk about the cryptocurrency market as well, which is not behaving according to my plans. So I'll explain that further in. So let's get started with cryptocurrencies first. Sorry, we could have a look at the actual... Yeah, we could do this. All right, let's go economy calendar first. Having a look at this, so it is not that big of a week. In terms of catalyst, I would say the most important ones on the euro area would just be the German ZU and GDP. If these things were to be even more disappointing, then yes, it could trigger another drop in the euro. But if they just get filling the consensus or eventually even just beating it a bit, it would be potentially a bullish catalyst for the euro. So it could drive euro dollar bullish to eventually validate the structures. We'll talk thereafter. Obviously, regarding the GBP, we're going to have the CPIs as well. If anything goes positive in here, then GBP USD could have a strong rebound. So we're going to talk about this as well. And regarding the dollar, this is where I expect numbers to eventually start disappointing. We expect the retail sales to turn, we expect the core retail sales to be stable, and I tend to believe they will be disappointing. And if they do, then that could be a good and positive sign for us, bringing the dollar down. But that's not the hell of a week in terms of market catalyst. All right, full screen. So this is how we go. Regarding cryptocurrencies, here we are. What the hell do we do with it? It's tough to say because even though we didn't manage to close a bullish week, we're closing below 50% of this candle, so it's an upper shadow kind of context. Still, this is the highest weekly close we've ever made out of this recent run. And I cannot avoid that information. I cannot say, all right, that's not relevant. I think it could be relevant at some point. I never would have expected such a bullish move last week. Definitely not, because we were there last time we talked. So I didn't nearly imagine that we'll start the week with some bullishness. I thought we would have to build a resistance in here or just try to break and then fail. Instead of it, we stood there and just released the energy at the last minute. So kind of a problem to me. Kind of a problem because it can say two very different things. So today I'm going to have both a bullish and a bearish perspective. I totally, once again, respect whichever you have picked, which means if you have a bullish vision on the cryptocurrencies, I'm fine with that. Just goddamn manage your risk, and this is clearly not an area to do so. So for in this area, what we're trading is, we're still trading the weekly resistant context. Remember that we need to get out of the tethers in here to get more historical trades. So weekly context have been bullish reactivated. since last month, and the problem is still we're trading with resistances, so it is not about time to buy. We just failed so far on a 61% retracement in the bearish context. Remember what it says, we could be fucking bearish ranging. Remember that bearish ranges are 61% and inside the context reversal. So if we build a market top in here, yes, we could make another dip below 3K. And that wouldn't necessarily be the big of a deal. We're going to have to catch up on the weekly chart support context, fuck it up, probably make a new low, and then we'll buy. That's obviously possible. If you think that cannot work, then you're totally fucking wrong. Yes, it can happen, just like yes, we could go 20Ks, because what happened last week wasn't part of my plans. All right, now let's get to USDT again, and here we go daily. All right, so what do you see here? That should be obvious to you. Once again, if you don't know how to contextualize a market, use goddamn tools. Those tools have no bias. They don't care if you're buying or selling. They don't care if you're bullish or bearish. They're just here to highlight technical risk management. So what you can see in here is two, goddamn, come here, all right, is two opposite square signals. So what does that signals? All right, these are the rules. It generally tells you that you've got a mature range structure, at least a visible mature range structure. So normally what it says in here is that you should be able to highlight the range structure. So let's do the job. What does this look like? I don't know. It doesn't really ring a bell to me, but I see early signs of something. What I see in here is that bearish impulse, bullish impulse, bullish impulse. It sounds like a triangle, isn't it? All right, so two sets of ways, bullish, bearish. So we could be consolidating this first crazy fucking parabolic move, not by a speculative crash, but by a triangle. Still, would this mean you need to be bullish right now? Definitely fucking not. So what the hell do we do with it? I think there's just nothing left to do. All I would say is that if you sold this area with me, I'm going to be straightforward with you guys, by the way. I actually got it right at the top in here. I gave you this fucking signal, trading the 1 hour chart target in here. So I had the perfect price. I got to sell again right in here, or in here, I don't even remember. And I put in my stop losses at 12.75, something like that. We never reached out to this price in here, but my broker basically made an ugly upper shadow candle, just stopping me at the dollar. So I'm out on my cryptocurrencies short entries, but I don't want to sell just right now because I don't nearly think it's worth the shot. I think what we're having right now and what we are facing right now is probably a daily range triangle. So a triangle, which means we could have several months of hesitation going ahead, not because the market isn't bullish, because if we do build a triangle, that's firmly bullish actually, because regarding the way we managed to go up there with a crazy bubblish parabolic move, I was expecting a speculative crash, but the speculative crash doesn't nearly fit the plan anymore. Remember that the speculative crash is we need here is the liquidity issue, here is the bear market, there's the hope phase, and there is the final crashing structure, all right? The volatility reduction, and finally and sometimes a final speculative crash area. But we're definitely not there, all right? We should have kept going in here instead of building a support and breaking a resistance. I would agree with price going there or working this area. Wouldn't necessarily be a problem to me. It really has been starting to be a problem right on last Monday. So something definitely didn't go according to my plan, which means I have to review my plan. This scenario doesn't seem to be working anymore. So what do we do with it? Like I said, triangle definitely is one of the options, but it's not the only one. We could also have the ABC, 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 which is WXY structure for the Elliott guys. So we could have that structure. Definitely we could. That wouldn't be a problem in that. In that potential structures, I think we're hardly going to be retracing below 7.2. I think we can eventually even build a support out of 7.2 and not filling this gap. So my new targets, definitely not getting to 5K. I think right now we just can't do this, or hardly can handle 5.2K, unless what we're about to do is even worse than that, which is we trend out of here and then we're gonna have to go even lower. Okay, but I don't think that's the current motive. I'm not favoring building a new dip below the 3.4K. I don't think we're gonna go there. We could, but it definitely suggests that we need to have a falling apart market in the following month, which I think instead of it, we're probably going to have a market contraction. So for now, what I forecast to be the most probable is very likely going to be a triangle. The most bearish structure could be an ABC retracing down to the 7.5K, and I hardly think we're going to go any further than that. So that's my new context for cryptocurrencies. I had to review it, not because I changed my mind, simply because that doesn't nearly fit the plan of a speculative crash. So I cannot trade this context anymore. That's why I've been stopped out, actually. Remember that my stop losses were set at 11.6K, so I got stopped out of this speculative crash scenario. At break even, so no losses, I just basically gave away all the previous gains I had. That's too bad, but it happens. Anyway, moving out of cryptocurrencies, I'm not talking about altcoins because it's definitely even worse than that, so I can't even stress that. I don't know what to say about Bitcoin, so how could I even say something regarding altcoins? All I can tell you is that the BTC dominance has been breaking. This was the previous high before triggering the crashes early 2018. So we've managed to get there and multiple candle closures, but still looks like a market excess to me. Like we try to go there, we fill the gaps, we go to this area, three-wave structure, we're pretty much overextended. I think the dominance should head to the downside. Still, does that mean you can buy altcoins with a BTC fucking dominance over 70 or close to 70? That doesn't nearly fit the plan to me. So altcoin season, definitely not now. I would say wait for a little bit more visibility for doing anything. Of course, you can diversify and buy some altcoins, but don't do it with the vision of an alt season. I think it's pretty much immature, not to say a little bit dangerous to forecast this at the moment. Anyway, going out of here, stock market. So hell of a week it's been. Lower shadow candle, hell of a lower shadow candle, but still, I don't nearly think that's the kind of candle you want to buy, because in the current context, pretty much like the kind of candle you should be worried about. So that's how it is. We need to process this information anyway, but as it happens, after a pretty bearish signal, overbought cluster, red triangle, so worst case scenario in the weekly charts, but the question is, does that actually mean something? Yes, it means something, but it has to be confirmed throughout the next few weeks, because if we manage to build a fucking support out of here and get to historical highs again, oh god, I don't really understand the markets, but I see that hardly going to happen, because technically speaking, I don't see a goddamn chance for this to trigger, but still, the new paradigm. So people are still hoping for this, bracing themselves for the best, but that's the current motive, all right? Like anytime we've built a dip, we've managed to rise from ashes. Are we going to be doing this once again? I would say I can hardly see this, but I've been identifying an area of concern, which is regarding the future markets. All right, so let's go weekly. I think you see that way more clearly. In the weekly chart, we got down to this support area, but if you have a look at the stock market on a caching perspective, it isn't that bad. We haven't gone that far down on prices, and that's a concern to me, because I would generally like the cash market to pricing all the best, all the worst, though breaking some supports, and I don't see that with the caching structure. What I see in here is concerning for bears, because if it's validated by some bullishness with the caching structure, means we've gone over bearish with the futures market. And if that is what the market is about to print, then as a bear, I'll have pretty much some concerns, and I'll probably have to trigger some stop losses. Not without losses, because now every trade I have is secured, so if we go up, I'm just going to lose gains. But I definitely want those gains to pay for the fucking losses that Wall Street's been taking away from me previously. The thing is that reacting in this area could make sense, because this is where we trapped the bears the last time. Let me show you that, all right? So, right? This is where we trapped the bears the first time. But the problem is, we trapped us in here, me included, but we already tested this area. So this is like trapping, and in here we buy because so many bears were wrong-footed previously. Some guys in here probably holded the stop losses, holded the losses and got out in here, which means you were selling and you had to buy yourself out at your entry price, which led the market to new high. But I don't nearly think going into this area will provide some support, despite strong support. So we need something to happen in here, and let's be honest, all I see right now is the dollar. So the dollar is going to be a huge game changer. If I think dollar is going to go down, I definitely think that's the next motive, and what I'm concerned about is how the stock market will react. Is the dollar going down going to bring us expectations of higher returns, of profitability from the corporations, though we're going to rise their prices in dollar, or it's going to be the signal for a sell-off, because people will say, oh man, no, the companies are not going to make profits anymore, we might go recession, so we need to sell them before the storms comes out. So that's really two options, two very possible options. So the stock market right now is probably the hardest thing to forecast, because I see both options viable. The dollar going down and attracting capital again, at least in the stock market perspective, because we have multinational companies right now who are making profits everywhere on the globe, and if they have to bring back the profits in dollar, if the dollar gets weaker, then they'll bring up bigger dollar profits. So it's hard to say. It's a very complex situation. But the problem is, if I had to, I'll give you my personal bias. You know about it. I'm selling for a simple reason, because we went so freakingly too far in the US that I would see way more options to the downside. Still, I'm totally aware of the fact that we could just use the dollar going down to push the stock market higher and trigger the biggest bubble ever made in the US. But still, I don't favor this scenario because I have to pick a goddamn choice. If you're not agreed with me, I totally understand that. And like I said, if you want to buy, I'm okay with that, but you can't buy resistances. Simple as that. So if you wanted to buy, you bought the lows last week, and that's it. And all you're going to do is that you're going to put a stop loss in here and brace yourself and hope this will break the top instead of breaking the bottom. So now everyone knows where the stop losses are. Stop losses are there for the bears. If we go there, the bears will get out and probably going to make a new high. If we go there, the bulls will trigger the stop losses and we'll make new lows. So it's simple as that, all right? We've got two attractive areas for the weeks to come. First one is in here, second one is in there, all right? And where are we trading currently? Right in fucking between, simply because we don't know where the hell we're going to be doing and what to do with it. So we're going to die in here and hesitate. So to me, the expected area to trade for the week is in here, simply because no one knows what to do. No one's talking. Everyone's on vacation, so no central bankers, no catalysts, very few information from the market. Trump's tweeting, but the market doesn't really give a shit anymore. So I would say probably dying in this area seems to be the most probable stuff, because I don't think neither the bulls or the bears have enough strength to take over the opposite, their opponents. So I pretty much think we're going to die in here waiting for further informations and like digesting the dollar's direction. I think the dollar is probably going to pull back, not necessarily break down supports, but pull back to support areas. So in a global context, to me, what happened last week is that we finally released a bit of energy from the stock market. I don't think it's enough, because we didn't nearly manage to break any significant support. We just tried to build a support out of a moving average that has been tested already. So normally we should break this one down, but we had quite a rebound last week. What I would say is VIX is giving me the most reliable answer, at least currently. I think this is where the safest trades are. Because normally, as you can see in here, we finally managed to fucking break a resistance and holding candle closes. That's really the most important information in here. The cycle is freakingly broken. Cycle, 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 we're breaking it up. So normally what we should have right now is the opposite. Instead of two sets of waves to the upside, we should have impulses in here and two sets of waves to consolidate. All right, so let me explain. Instead of having 5 waves pushing to the downside and just 2 waves to the upside, we now have a different structure. Sorry, not that. Now we have impulse, impulse, impulse. We do have a bullish market structure. What I'd like to see is just 2 sets of waves and starting again with 5 waves. So that's what I'd like to see coming, starting now. I would like to see the market holding on to these 2 sets of waves and starting to build a bullish oscillation again. Breaking a resistance would be normal right now for the volatility. So highlighting this potential resistance is crucial to me. I think the next area could be there, 28, simply because we've got a target in here. I'll show it to you if it managed to get it to me. It's 4 hours, so we got a target in here, so that's possible for us to get there. That would say that's a risk management area out of the previous trend line as well. So this is a cluster area. If I've got some strong bearish signals, I'll probably profit take my VIX. But otherwise, I'm going to target this area in here, which is the previous market resistance, meaning we go there, we break the trend line, but we fail to break the market top. That would be appropriate to me because it's bullish but not too bullish. Like we go there and then we start to retrace and we give some hope for the bears. All right, so not necessarily some hope, but the chance to be 2 sets of waves and to give us another set of 5 waves to the downside. That would be an appropriate option to be both bullish and bearish and maintaining uncertainty in the market, because that's exactly what we currently do trade. Uncertainty. We don't know a goddamn shit about the economy, but the bulls are trying to make us believe that everything is going to be fine. We don't know, so we shouldn't be fine. We should be hesitating and ranging. That's exactly what I think we do. The problem is this range is a bearish, is an extended range structure in which we both break supports and resistance. But the thing is that if you have a look at the stock market itself, everyone thinks we're just breaking resistances. That's forgetting that we broke some supports, and that's forgetting that I think we're going to break this support as well and going down to the 2000 area and even below it without without any problem. So VIX, German bonds, I've been taking another trade, but I don't know how this thing is ever gonna work, because it feels like the market wants to go like minus 2% negative yielding. I don't know, but still. I took a stop loss last week. It was even before last week. I took a stop loss in here. Or in here, and as we traded 0.60, I decided to take another trade on the signal in here. It's still not yet validated, so I'm pending for validation. It's definitely a tough trade, but I think it's mature enough. We'll see. All right, like I said, I don't know anything. This market is probably the hardest ones to trade. But I want to have some bonds just in case anything goes wrong. Like if Germany decides to tackle up the possible recession with, and decides to change the politics, like they starts to rise a little bit of debt to finance public expenses. If something like that happens, the bonds will immediately crash. Not necessarily crash, but the yieldings will change almost instantly. If we have just a glimpse of a political change coming from Germany, then this will go there almost instantly. So this is what I'm trading. I know it's risky. I don't know. I'm trading something that is hardly controllable. But I know that this is how the market will react if such thing happen. Very low probabilities, but if it happens, the gains will be significant and there will be no pullbacks. All right, it's going to be an instant switch. This is why I want to be there. I can be wrong. I could definitely be wrong, and if that is, then I'll take another set of losses out of this. until the day this will happen and I'll get to make the profit. So it's simple as that. I know the bonds are dangerously trading. I know I'm trading against the bubble. I know it's dangerous, but I also know that the day something will go wrong, I'll take so much money that will pay off for every pending losses I had prior to this. So I keep doing it just safely. And with a decent money management. I haven't been shorting with all my equity accounts, so it's pretty much like I'm trying just to be in the game if anything goes unexpected, because I think we're trading that kind of moment. The 10-year bonds in the US, pretty much hard to trade as well. If you're having a look at this, it's complex, I would say. We've got a positive range structure in here on the mature range, so this could just be a classical two sets of wave consolidation. Classical range, mature range, you buy in here and you get to create another set of bullishness, because if you have a look at this in a monthly basis, then this could be bullish, all right, like two sets of bullish, two sets of bearish, but orientated to the upside. So it would be all right, like consolidating and then going bullish wouldn't necessarily be a problem. So I don't know how to trade with T-bonds because in terms of momentum, we've got a negative divergence. So if we're about to build a resistance in here, we're probably going to retrace down to support, probably 61% retracement. But I think this could be a buy the dip situation. So I don't know how the bond market will react. Like I said, there's one thing I think is the most probable is the dollar going down. Now, out of this, remember that this is a triplet. All right, we've got the dollar, we've got the bonds, and we've got the stock market. All right, and aside of it, we've got all the risk factors, the gold, but all of these are already bullish to me. So the risk assets shows some problems down the corner. The problems will have to materialize somewhere. They can be materializing through the dollar. They can be materializing through asset prices dropping significantly, and they can be showing up with the bond market falling like shit. So three things. And at least one of them has to go down. I think the dollar is probably not a certainty because nothing is ever certain, but I think is very likely. So if it does trigger, the dollar will go down. The question is, how will the others behave? How is the 10-year bonds going to behave? Are they going to head toward resistance and break it before consolidating, or going to consolidate first to maintain and break the resistance afterwards? Both of those scenarios are pretty much possible. We're trading monthly in here, right? So the direction in here is complex. The two clusters to me are in here and in here. So I don't know where we're going. I just know we're sitting in between, and the market will have to pick a decision. Out of the stock market, like we said, we're in an ugly structure like that. So two options: either we accumulate in here before bam breaking it up, or we go straight down to the bearish area, accumulate a bit and break down, because there is obviously going to be some kind of panic selling in here before buying the dip. And regarding the dollar, like we said, we're going to go straight to dollar right now. So the dollar has these options, all right? Either we go there, all right, which I think hardly possible, but still that's an option, and if it is, then I'll trigger my stop losses, or we build the structure in here, we're going to stop, we're going to reverse in here, and the next stop is in there, right? So it gives us two clusters in here and in here, and what we do is sitting in between, obviously, before picking the decision. When we'll get to make that decision, and what this decision will be is the key to understand what's coming next. What we have in here is probably going to be a breakout. Look at the structure, right? Look at the sine wave oscillation. So if we were about to build a bearish momentum, it's going to be a bearish breakout momentum. So bearish momentum in here, you're going to go to this area, and we're obviously going to break our support and probably even two. So I think next stop is in here or eventually in there if we go bearish. I think the dollar going bearish is probably the most probable scenario in here. I'm not saying that's certain, never will, but very likely going to happen. So you know what I'm doing. I'm buying the gold, buying the silver, buying any fucking thing that is versus dollar. Euro dollar, GBP US dollar. I'm selling hard on GBP USD yen, on USD GPY. There's just a WTI that I don't know what the hell I'm going to be doing with. I don't want to buy WTI. but selling it is going to be even trickier right now, because if the dollar starts to retrace and go bearish, then remember that this is priced in dollars. So the dollar component of this cross will bring prices higher, but still I think the WTI itself will be bearish. So bearish with bearish. So trading the WTI is going to be pretty fucking tricky, because who knows which one of the dollar or the WTI will be the most bearish. All right, and I don't know about it, so I would say right now trading WTI, it feels a little bit too tricky to me. Trading those hesitation on the bear side was definitely the best trades to do. Selling in here, and selling a bit in here. I missed all those fucking trades. So that's it. So euro dollar, right, just like we said regarding the dollar, we've got a strong reactivation. We tried to fuck up people in here. We still haven't been. We need to break this area. We need to break this trend channel, and once we get to do this, then we'll have a clean and cleaner signal about the dollar. Right now we're still hesitating and waiting. Regarding GBP, there is the GBP component in here that is strongly and firmly, but I think this is where we got the strongest informations and trade over the week to come. I will buy some GDP. I would buy some GDP if I didn't have a lot of them already. So I have more than enough GBPs. I cannot reinforce because I'm already at the maximum speculative leverage, but there is a target in here. Normally it's going to stop prices for approximately 40 bars. Normally we can't go any further than that until 25th of September. So we could go, we normally can't go below. And if we get to stop in here out of a support area, I think we generally, and very likely, I think the dollar is going to take over, which means the dollar being even more bearish than the GBP, bringing the GBP USD back to resistances area. I didn't nearly say the GBP will be bullish. I think it's bearish, but I think the dollar is just even more bearish than that. So I think retracing to neutrality, retracing to previous resistance seems to be the most probable scenario. We haven't been testing this area, so I would say back to neutrality. Secure the trades in here, and hopefully the dollar gets even worse bearish, and we can eventually, after working out this area, try to build a support. So there's going to be a strong range in this area anyway. I just think we're buying the dip in here to retrace to neutrality, which is 1.27. That's what I think it is. Don't think the market is going to be firmly freaking bullish on GBP USD about now. I think it's going to take quite a while. First we need to figure out the Brexit to get to eventually break resistances. But I think right now, Brexit, no Brexit, hard Brexit, whatever, any fucking way, I think 1.27 seems to be an area to retest, whether we like it or not. I think it's not about that. I think it's just about relative strength of forex currencies. AUDUSD building a bullish engulfing structure last week, still hardly making it valid, so we're working out this area. It's just a taking profit, so don't be too aggressive, but I think it's more than enough as we do trade a target, and I think we got more than enough to forecast. Bam! Market retracing bullish, getting to test the previous resistances, and we'll see how it goes. After this, we can expect some retracement, but everyone saw this bearish trend channel, so I would say as long as we do trading here, expect some profit taking in here, risk management. That's what I'll do as well. Probably some early pullbacks in here, and we'll have higher lows, I think, is where we're going to be able to break this structure to the upside. So still a little bit of hesitation between AUD and USD. AUD is pretty weak as well, so it is not about time to get a strong trends on AUD, USD and stuff like that, but I think it's about to come. Which I think NZD USD is in a pretty fucking different perspective. I think in here that even if the dollar will be weaker, I think NZD is going to be even more. In here we've got bearish range structure, which means even if the dollar is going to be weak, I think the NZD is going to be even weaker, which means we could have negative NZD and bullish, or at least hesitating AUD. And that should bring us to the AUDNZD, who is making a bullish engulfing structure on the weekly chart. We're not talking about daily in here, we're talking about weekly chart bullish engulfing with a signal. So that is definitely something. The bears wanted us to break down this area, to be crazy fucking bearish. So we're not yet crazy fucking bullish neither, right? We're still hesitating in this area. And I think the bears, that's been done with a rollover. So we didn't nearly trade that. It's not a market catalyst, just a rollover. So we've made new low with the rollovers, reason why you don't put a goddamn stop loss on this market, but still, what we have in here is in terms of candle closes, we've got the higher lows. So what I'm waiting now is to get in here, trade this area, and breaking it up. So I'm waiting for this to retrace down to the previous tops, up to the previous tops. Here is where I'm going to risk manage, and then who knows what's going to come next. Either we're going to fail one more time and hesitating again, or we're going to make it and break the resistance. And if that happens, then there's not a single chance that we can stop before 1.20, 21, 22. So there is a really, really huge trade in here. I just don't know where and when it's going to trigger. But like I said, the dollar may be the catalyst in here, putting the kiwi down, as it could be balanced with AUD. Not a strong AUD, just a very weak NZD is probably what's going to bring prices down, bring the AUD NZD up. Regarding the yen pairs, you know what I think about it. I think the yen is firmly going to be bullish just because of the risk assets, just because of the risks rising. We'll have a look at the junk bonds as well because it's necessary. So the junk bonds, just like the stock market, try to save the dip last week. Obviously, because if they don't, you know what the hell is going to happen. So I would say the structure in here is either we try to consolidate and maintain the risk into two sets of waves, like the first one was in here and the second one was 1, 2, 3. All right, so 3 impulses, building a rounding top. So we've got two options. Either we replicate this structure and we'll just be 1, 2, 3 and then go bearish. All right, we try to save the dip, everything goes fine. The market doesn't change the new paradigm. We go historical highs. We try to break the extended structure on Wall Street by the high. So we try to rise our hashes from this, try to go there, and only afterwards we'll get to crash both of them. Option number 2, we already dealt with that. Something goes unexpected. We traded the moving averages, so the 20 fucking quarter. So it's the 3 months moving average in here. So it's a 20 period moving average of 3 months. So if we get to sell in here, it just means, all right, we're bearish trending, which means we're going to break this low and everything according to this plan. We've got a freakingly negative divergence in here. Or no, actually, what we have is, no. We've made new highs with new highs. So it's a convergent momentum. So what the momentum does, the price will follow. So we don't know yet. What I could tell is that we had a range structure in here. We hardly could break this one up. I don't see any reason for the risk to be brought down. So we'll see. But I would say probably junk bonds. Retracing in here, not necessarily breaking supports, but I think retracing to this area. So just like I said, probably risk down the corner for Wall Street. How they going to price that in, I don't know. Is the dollar going down going to be taking care of pricing in the risk and the assets in here maintaining some hesitation? Or is this what's going to trigger, is this the sparkle that will just blow up the Wall Street's pricing? That I think that's likely. Remember that the earnings season came through and it wasn't good. It really wasn't good. So there's not a lot to expect from the future. The next quarter results will probably be not better. Some of the guidances were reviewed and not to the upside. So I see a lot of concerns, a lot of concerns. The most concerning area being the tech sector, and especially Apple, because Apple, even if the number weren't that bad, all right, so stuff like that, this is what it looks like. If we head towards some bearishness with Apple, the ugliest part is still ahead. Like in here, it's probably going to be a crash. Like speculative crash definitely is, liquidity issues, that we've got everything we needed. We figure out that this is not bullish, we're breaking support. Still, we retrace, hope phase. I see a lot of hope out of Apple. But still, going in here is probably going to trigger another profit warning by the next quarter. So if we get another profit warning from Apple, then we're probably going to be there by then. All right, I'm not going to cover individual stocks. We're going to take care of it in a video further in time. So if I sum up information, I think right now dollar is the scenario I have the most. I would say the odds are the most reliable to me for the week to come. Trying to build a support out of dollar. It's not yet done, so don't be leveraged for now. Just be speculative leverage exposed to those markets, waiting for a dip to be built out of your dollar and GBP USD. If we manage to build this dip, then we're fine and we should be safe. Normally, gold and silver should be profiting from the bearish dollar. Just because they're trending. So I think gold is going to break new highs and silver as well for the week to come. I think silver is definitely the most important one because this one has still a lot to go to get to its target. So I think, yes, going to 18 with the silver is probably going to happen sooner or later. I think just a few weeks. Normally we're trending. We've got higher lows. We've got a bullish momentum. So we should break beyond this target. So we should get there, risk manage, and we're probably going to go beyond and trigger a trend out of this. So I think, yes, silver is definitely a very interesting asset class right now. So look out for potentially 4-hour pullbacks or whatever, but I'm ready to buy any fucking thing we could have out there, like building another range in here. I'll buy it. But yes, reinforcing silver is probably what I'm going to be doing throughout the week. I'll tell you and I'll let you know about it. I'll probably reinforce a bit about the gold, but this one is pretty pricey, so I already have quite a significant exposition to gold, so I'm just going to let it go. All right, so probably a tiny reinforcement on gold, but I'm probably going to reinforce a little bit more on silver. Trying to buy euro or GBP versus the dollar. I'm still hugely exposed to the bear side on USD GPY, and I don't nearly even see a single bit of risk. I think in here we're going to just break down the yearly lows, and after that only I'm going to wait for a target and start profit taking. So for now, I think we're just triggering the goddamn signal. Remember that I've been working around this area for quite some time. Now we're trending. I'm not going to profit take. I'm just going to reinforce up, down, and down, and down. So now we're in support area, so it's not about time to reinforce, but remember we traded this one. I sold all on this area, sold hard. I sold hard in this area as well. So now I'm not profit taking because I think we're going to break down the support. But below the support, I'm going to start locking on some gains, waiting for further retracement. But now we're trending in here. So whether you like it or not, I think we're going to go to this area and even below in the future. What else do I have to talk to you about? I think we've done the job pretty much. All the other indices like the Nikkei, we already broke the supports. That's what lead me to believe that Wall Street's going to break it as well. Shanghai Composite broke it as well. So I think all those assets have been breaking the May's lows, so I think that's what's about to come with the Wall Street skies. But still, hard to say, all right? We need the VIX to validate the bottom first to get to do this. As long as we don't, be cautious, don't be too leveraged on Wall Street and stuff like that. Yes, there's a final thing I need to talk to you about. Let's go Wall Street anyway. So that's a request some users, advanced users have made throughout the latest weeks. So I worked on this before leaving, and I just terminated this yesterday evening. So framework is going to be updated version 2.2 probably later today or tomorrow in the worst case scenario, but I'll push this one out. I'll send you a notification, obviously. What's new is I just optimized a couple algorithms. No big deal. It shouldn't be a big game changer. What I put it in here, sorry about that. What I put it in is this, all right? So remember that with the momentum, you're starting with pro momentum, which is by far the easiest way to understand how momentum works, because this momentum pretty much oscillates, it's clean, it's neat, all right? So you know that you need to get into the overbought areas to sell, you need to get into the oversold area to buy, all right? Simple as that. As you get more experienced, you can be a little bit more aggressive using the RSI. The RSI is a little bit harsher, right? So it's harder to read, but more precise, right? So these are gradients. If you want to be less aggressive, then you can go using CCIs, for example. Give it a time to plot. No, CCIs is pretty. You can use TSI. Right? The TSI is come on, all right. Is weaker, so you can use whichever you want, all right? So you can be more aggressive using stochastics, RSI, or CCI, but as you get started with my strategy and try to learn risk management, you really want to use pro momentum, all right? I personally get to use the RSI right now, but That's up to you, all right? So these are personal changes, but you always start with the default settings, all right? It's important for you to start with pro-momentum and then get to the RSI eventually. What I've done is doing pretty much the same in here. You start with the pro channels. Remember, this is the algorithm I created to emulate channels plotting on charts. It's like an automatic trend channel building out of prices. But you can be using different stuffs. Like some people I've been asking mostly to get Bollinger Bands. They said, all right, Phil, now to contextualize the market, I'm using Bollinger Bands, so it would be nice to have Bollinger Bands in framework. That's what I just did. So only for you guys that are experienced enough, all right, if you're learning my strategy, like if you're still a green guy in Discord or yellow, you don't nearly get to change this. You still use pro fucking channels. It's just for guys who are mature or mature yellow color or getting to be orange. Then this is where you're gonna start making it personal. And if you're more familiar with the Bollinger Bands than you are with the trend channels, then switch to Bollinger Bands. All right, what it's going to be doing is simply it's going to change, and your context will now be Bollinger Bands. All right, it's still the same thing. The context is still in here a monthly chart-based stuff. All right, so what you have in here is the monthly Bollinger Bands. All right, 2 sets higher. So on the daily you get the monthly Bollinger Bands. On the 4-hour you get the weeklies. All right, it does the same job. Remember, that's key element. When you do, then what the hell is that, by the way? Something definitely has gone wrong in here. I don't know what the fuck is that. I need to work this out. These are the kinds of bugs I need to figure out. So this is why I don't go public with this before later today. So SPX daily, SPX 500 daily bug. All right, I need to figure this bug in here. It just doesn't work according to what it should be. But anyway, what we do in here is. So as you can see, you get your Bollinger Bands, so you can filter prices out according to this. So it's a different way of applying the strategy, but only for mature users who want to use volatility as a context filtering. Then I'm fine with that. It can definitely be done, but just learn how to do it safely. All right. Well, I need to figure this one out. It's fine, by the way, for the rest of it. Oh no, there are some issues in here as well. Oh my god, something goes wrong with the algo. Alright, I need to figure this out. And 4-hour, I think it's a data issue on trend channel. Alright, I'll figure this out before releasing this thing. So as you can see, 4-hour chart, SPX 500 negative range structure, which means anyway, normally in here, we might be ranging a bit, but we expect to break down this area. That's at least what I think is very, very likely going to happen. I don't know if we're going to get this signal with the other algo. No, we don't in here. Oh, that's odd. We should have it. That's pretty odd. We should have it. I'm going to work this one out. Anyway, that being said, so I'll keep you guys posted about this update. Just need to fix a few bugs first before getting further away with it. Regarding cryptocurrencies, a lot of indecision coming for me, so I rather like to stay away. If you still have the market top that we sold together in the Discord, then keep it, just put it at break even and let it fucking go. I've been stupidly taken out by a market making upper shadow candle, so it's ugly. Yeah, still it happens, but I don't want to be selling again with less attractive prices. So I just let it go, but because simply I don't have enough bearish vision right now. I think we can go lower, but yeah, I think the triangle structure is what I forecast right now. At least that's what seems to be the most probable. If we go even further than that, making the WXY structure and getting down to below 8K area, then I'll see about it. Anyway, for now, I'm cautiously trading cryptocurrencies. That's it for this week. Bye, guys. See you tomorrow. Trade safe.